Hey everybody, welcome back. We have a lot to go over. To start with, you can see that the future contracts have obviously rolled out, and I think that's just an important distinction for those that don't know. If you were on TradingView, just FYI, right here you can just reset them. But if we look at this, we can see the flag, we can see the little move. We're going to talk about why this happened, what's going on with the dollar, why you have to pay attention to the yen again, and we haven't had to pay attention to the yen really since back here, but we're back and we have to pay attention to it, so we're going to. Most importantly is this little move higher and why it's so important that it happened on Friday and why it did what it did to the chart, and let's get into it. Now, to start, this video is going to have three main concepts, but before we get into that, just take a look at what's going on here. This is at the top of a chart and you're forming a dragonfly. Now, for those that don't know, dragonfly patterns are something you always want to pay attention to. Is it perfect? No. A perfect dragonfly pattern is when you open and close at the exact same number and it's exactly at the high. A lot of things in life are not exact, right? We all know this, but that's about as good as you're going to get. When you start to see these at the top of a chart, you want to pay attention. Now we can see this is almost textbook. You come down, you test your 55 SMA on the weekly. Whenever you don't know where I'm at, you can always just see exactly the date that these were recorded up here. You can see what type of time frame I'm looking at the chart, and then the symbol that I'm using. I put everything right up here. You just come down, retest, reverses, everyone's happy and giddy, and then we lift, and now we have this dragonfly pattern sitting right there. I would pay attention to this. I would not sleep on it. And I like the way that it happened, and I like the way that we're seeing the rotation. We saw a lot of signs on Wednesday, Thursday, that we were going to come in, and that's not what happened, and we're going to get to those signs. Mostly it was on Japan again. Let's clean all this off. We're going to leave that for a second because I'm going to dig into that. There's a lesson here that we really should go over again, and I'm not going to want to set it up again for time's sake. But there's three concepts I really want to go over today. I really want people to understand why I'm so big on AI, and this company did a really good report. See right there, see I've got this hammer? Look at how that hammer closed. Look at that close over where you are. You want to pay attention to things like this, guys, especially going into December, especially when you have all these funds that are underperforming for the year. They're going to chase. They have to chase or they're going to lose their limited partnerships. People are going to pull their money out of accounts. That's just the game. And you look at how this is setting up. It's a real simple retest and then reversal. We can say whatever it is. We do need to talk about what's going on in Japan. We do need to talk about the amount of money that's sitting on the sidelines and how they're starting to just do straight out buyouts of companies and what field they're going to do that in. And we're going to get into that as well. But I want to just focus for a second on where exactly you are. And I'll take a look at this. Now, one of the things I always try to get people to understand, and I'll show you in a second right here, 8:30, the non-farm payrolls data hits. And it's worse than expected. We knew it might be worse than expected because we were talking about this in the pre-market public videos that we do every morning at 8:30. And we knew that this might be the case because of the ADP number that came out is skewed towards smaller companies than larger companies. But of course, you also had the strikes that ended, and that's of interest. And also you have secondary jobs, third jobs going into Christmas are not really factored best in here. So we knew that this might be a little bit of a blip and then a bounce. But you wanted to see this. So what we did is we just mark off that first minute. Why are you marking off this first minute? You are marking off that first minute because that is when the algorithms and high frequency traders establish their range. They know where they want to buy and they know where they want to sell. And let's talk about, we know the fact that wicks are price rejection, but why would you just stop here? And let's just think about that. Why would you stop going down? You'd stop going down because you don't have any more sellers. Okay, why would you stop going up? You don't have any more buyers. So really what they're doing is picture you're playing a game of poker and the algorithms and high frequency traders just showed you their card. So when you mark these levels off, you have an edge on them for once. And you need every edge that you can get. Now, watch this play out. You see the 8:30 level? And now what you want to do is you want to watch the 50% line. Always watch 50%. We're not going to put fibs in. Why would you watch 50%? Well, if this is where the algorithms are, and then all of a sudden in the high frequency traders, and all of a sudden you break over 50%, do you think it's a fair assessment to say that you have more buyers than sellers now on that side of the market? I think it's a fair assessment. Okay, and you can see, look at this 50 line. And all I did was just drop. People say, how do you do this? It's a fib level. All I'm doing is taking the fibs, taking out their fibs, and I'm putting in 50%. Remember, 50% is not a fib level. People don't know that, but it's not. But you just drop it in and then look at the battleground that's going on here. Undercuts, doji, undercut, rally, that's it. There's your break, and now you have some confirmation. But look what you can't get over, that high again. Why? Because this algorithm's not convinced yet, and they have a different agenda. And so then you start bouncing down, and then the market opens. Now look at where the market opens at. right at the 50% line, and look at what happened. Look how you bounce right off of that. This is really important to get, even for traders that are not day trading. And I want to say that again. This is an important concept for people to get, even if you're not day trading. You go back and look at this during the day because it will tell you, hey, what happened? What are these guys doing? Are they leaning towards being net buyers on the day or net sellers on the day? So by 9:30, what do you know? You know the range of where they're at. You know the data release. You know the range of where they're at. And then you know that they defended the 50% line. It's a fact. It's unequivocal. And now you're just watching it trade up. And then you know you have more data at 10 o'clock, 9:45, which you did. And then the market trades up. Let's pull this down and just watch this, because to me, this is absolutely fascinating. But I think a lot of this is fascinating. I'm a little bit of a nerd with this tech stuff. But watch what happens. So as the day goes on, you're grinding down, grinding down, grinding down. And look, that becomes your test right there. And look at where that is. And you can see the level sat right here, which just happens to be the same level that you went to here. So what happened here? Support. What happened here? It became resistance. What happened here? It became support. Was that support retested? It was retested right there. So if you utilize what I'm talking about right here, you have an edge. You have a significant edge, and I would not sleep on it. One of the things I always like to do, and you'll see it right here, is I like to show you that we are actually using this stuff in the room when we talk about it. There's a trade up here, CRSP. If I have time, I'll show you how I did this. Essentially, I married a put during the day to the stock, and it provided a huge entry for us to get in being long. If I have the time, we'll cover it. If not, I'll cover it on Monday. If you want to look at married puts, especially on expiration date, and that's of interest, I can do a whole video on it. Just comment below if this is something you're interested in learning, especially on Fridays. It gives you a huge edge on your longs. But here you can see it, and I'll blow that up. And all I'm saying here is another test of previous resistance in the NQ. And what I'm showing is exactly when this happens. Now, what this does for us in the community when we're trading is we know that this level needs to hold. And if this level needs to hold, well, that gives us an edge. And that gives us an edge over other traders. It gives us an edge in knowing where we want to start looking at putting our trades on. And I think that's a very important distinction. And take a moment and just say thanks for sharing these videos. I actually do get emails now going, hey, so-and-so shared this video. Even if you're not sharing them on social media and you're telling people about them, you'd be really surprised how much people are appreciating learning some of these nuances and just really easy reads on how you can get a little bit better on the market. But let's just mark where that is right now. Okay, so that is going to be what? That is going to be exactly what we thought. It's going to be 12:15. Okay. And then just watch the day play out, and I promise not to hum. But if you see how that looks, you're going, okay, I have an edge. I understand how this works. Now, this just doesn't work on Fridays for non-farm payrolls. This works on any economic data or any data that comes out during the day. You can use this when next week we have the Fed meeting. Go look at what happens at 2 o'clock. Go look what happens when Powell comes out and he makes his little statement, and watch that 12:30 bar and watch what they do. So this is really helpful. You might want to watch that again, but let's just take a stock. It doesn't matter. We'll take NVIDIA because we're going to head that way anyway. And say, gee, I wonder what happened at 12:15. I wonder what happened after 12:15. Okay. So this helps you identify areas where you can get into trades. This is not, a quick cheat code. This is not a quick hack. This is you actually using market data to make more intelligent decisions and get an edge. Remember, you are playing against the smartest, most disciplined people in the world. You need to act like it. All right. So you know where your levels are. You come down, you flip VWAP, you could get in. I wonder if it worked on any other trades. And you can literally just go through them and pick them. It doesn't even matter. And you'll see that these levels, wherever you get to there, you had your little pullback, and then what happens after that pullback. And then you could always utilize, like, let's say, geez, I don't know which ones to buy. Well, you could always use some of the other tips that we put in before, where you could go NVIDIA, Microsoft, and it doesn't really matter which else, Snow, right? And you could just go and take a look and go, which ones do I really want to get into? And you guys remember this from before, but let's just bring it all full circle. Let's drop this down to a line, and I promise not to make this video 4 hours long, but we're hitting a vein here, so let's rock with it. Now, okay, so I don't know which names to be in. I don't know. What name should you have bought? Should you have bought Microsoft? Should you have bought NVIDIA? Or do you think that you could have tied this to the interest rate trade that we've been talking about, for the past month now, since November? Because why people are playing Apple, Microsoft, Snow, and NVIDIA, Affirm and UPST are crushing it, and people think it's a short squeeze. But it's a rate trade because you've been watching these videos, because you've been watching how they're going to cut rates, and you know that both of their businesses are tied to rates. That's why you know that regionals are going up and REITs are going up. See how this is? It's all connected. It's all connected. I feel like that meme on Always Sunny in Philadelphia right now, but hopefully you get it and you see where I'm trying to go with this. Let's clean all this off. I know there's an easier way to do it, but I was a little bit pot committed there when I started clicking on it. So it is what it is. We should talk about what's going on in XLK while I have this up and take a look at this, clean all my nonsense off. There is a free newsletter. Make sure you get it. And the community is closed. If you had received a 12-hour invite and you clicked on it and it doesn't work anymore, it's because it doesn't work anymore. There are some cases where I will open a link up for people. If something happens, some of the links didn't work, just email me and I'll take care of it. But other than that, the community is done for enrollment until next year at some point. So if you take a look here and you see how this is going up and how we're pushing, you're going to want to pay attention to this. Apple, Microsoft, they're leading the SPY again, right? Well, does that mean that we shouldn't be looking at IWM? No, you should most certainly be looking at IWM and paying attention to it. But the real thing that we need to pay attention to, in my opinion, is what's going on with the dollar, because the dollar in and of itself is the trade. And this should be the first topic that we should really get into, because this will be very simple for you guys to cover. If you're newer, you're not going to remember this, but on July 28th, and you may have known this already on your own, of course, but on July 28th, you had some interventions start to happen with the bond market and the monetary policy in Japan. And you'll see how we came down and then how we rallied right here. And that rally that led to this till about October 5th. And it's always fun to just mark these things off and see. So you can kind of see where we were from July to about October 5th. And then we went sideways. And then just kind of take a look at the ES from there and just mark that off from, to say, July 28th to, let's just take October 5th right here, and you can kind of see what happened there. And that is the base of the move. And then, of course, you have this that followed until Powell spoke, and we got a better handle on how they're going to combat what's going on there. And if they're not going to raise rates anymore with what Japan's doing, that gave us stabilization, which pushed us higher. A lot of people don't follow that. You want to follow it because it gives you what? It gives you an edge, okay? Remember, I'm not going to break out the stool for time's sake, but we look at the macro, fundamental, and technicals here, right? It's really important for people to get that. Macro, fundamentals, technical, but for time's sake, I won't put everybody through the stool talk again. And I promise not to say $1.7 trillion in this video. So, all right, so here's the US dollar versus the yen. And you'll note that we've been going down from the 13th, and then we just absolutely collapsed the one day. Well, why do we collapse that one day? Well, basically, Japan came out and said, just kidding. We're probably not going to do what we're talking about doing. And then everyone sold the dollar down and the market rallied. Then we went sideways, but take a look at this. All right, so do you need to become a dollar expert or currency expert? No. Here's what you need to know. You need to watch the dollar. Whether or not you understand, quote, yen enthusiasm, this is from Reuters, whether or not you understand yen enthusiasm, whether or not you care about the yen, I don't really care. But you need to understand that it affects the US dollar, and the US dollar is going to affect your YOLO options or whatever the crazy kids are doing these days. So you're going to have to understand that, right? You have to make those connections, right? So you know this, dollar down, stocks up, right? Don't overthink it. And the yen affects the dollar. So we're going to want to pay attention to that. All right. Although the yen was lower after the readout of U.S. November jobs data, the jobs data comes out, it surged as much as 1.2% earlier, adding to Thursday's 2% rally after Bank of Japan, I'm not going to butcher his name, clearest steer yet that the central bank was considering to wrap up its negative rates policy and was heading for its fourth weekly gain against the dollar. On Friday, the currency has vaulted to a multi-month highs against a range of other in the last 2 days, although some of that strength dissipated over Friday's European trading session. Thursday's rally was the largest one-day jump for the yen since January, but without more impetus from the BOJ, it may not have much more scope for outsized gains. Thursday's rally was the largest one-day jump for the yen since January, but with more impetus from the BOJ, it may not have much more scope for outsized gains. That's interesting. It's interesting timing. What happened to our stock market in January? I think it went up. I think it's pretty clear the BOJ, other central banks were late in 21 in the case of having the lowest real interest rates in the world. It's not very strong at this point, but the question is, how long do they want to prepare? This gentleman had a statement. The yen has fared better against high-yielding currencies such as the pound. Sterling fell, blah, 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 blah. You get it. I'm not going to bore everybody with a lesson in the yen. But here's January, and look at what happened to the dollar on the 6th, and look at how the dollar collapsed. Look at what happened to the ES on January 6th. Do you think you want to pay attention to the dollar? Do you think you want to pay attention to the yen? The answer is yes. Yes, you do. That's not going to affect the TNX trade as much as it once did, but you're going to want to pay attention to this, and you're going to want to pay attention to the 10-year. Obviously, regionals and REITs are the easiest trades in the world right now until they start leveling off, cutting rates, and this all starts getting factored in. You will note some of the names that we've been talking about for some time on this channel, such as SLG, VNO. These names look like absolute monsters. Okay, while we're fighting over, does NVIDIA go up $2 or $3, people are making 10% in a day in UPST and thinking that it's a short squeeze. They don't get it. I'm not going to walk through their entire model, but just think about it. They lend money. Okay? If they can borrow money cheaper and lend money higher, then they make more money. Affirm, same thing, just on a different scale. I'm not saying there's not a short squeeze going on as well, and that shorts aren't going, oh boy, I have a problem. But you have to understand that this is going across every single field that's in here. Every single field like this is going to benefit from it. So you're going to have to start looking at those types of situations. There's a reason why DPST looks like it's about to rip everyone's face off, right? There's a reason why it looks like it's getting ready to explode. There's a reason why regionals look like they're going to finally break out of this year base, okay? There's a reason why we've been buying these in the community. Okay? There's a reason why utilities are pushing. Right? It's all one big interest rate trade, and it has nothing to do with AI, but we are going to get into AI. Before we do that, I do think I want to cover one topic really quickly here so people get this. And there are three main topics in this video I want to cover. That was one of them. The second one I want people to get and wrap around their heads is XBI, this split, this reverse split that just happened on LABU. I've just disclosure, I have a position in LABU. We've done okay with it. I think we'll do much better, but you have massive amounts of capital at biotech companies. They were fine when they were earning 5% or more. They were making money. If they're going to go into 24, they're going to start looking for deals. And that's what we're already starting to see, right? You're starting to see the deals pop up. I think 24 is going to be the year of the deal. I think you're going to see a lot of these deals. You're seeing it in other fields already with Hawaiian Holdings, which has popped up. I have a position here as well. But you're already seeing these mergers happen in different fields. And we've been seeing them for some time, but we're really starting to see them in biotech. So you can see the IMGN and what happened here and how this popped up. And you can see right in here, you're up and you still have about $2 in here, but it's probably gonna take a year or longer. And that 7-8%, someone's not willing to wait, but you're seeing it again. Look at this CE and how this is trading up, and we can see how that's going. Well, that looks fantastic, doesn't it? And then you can see how it leaked out already. Now, interestingly enough, if you go and take a look, just a quick tip, if you go on your data feed, whoever you use, whatever news feed you use, and you're following biotech, you want to look at insider buying from board of directors, because they always know. It's the board of directors that know what's going on. Go look at the amount of stock the board of directors were buying since October. They already knew. They already knew what they were doing, that this company was for sale. I mean, one guy bought $125 million worth of stock in the open market, right? He's not doing that because he's feeling warm and fuzzy about the company. He knows something. And that's exactly what happened here. So keep that in mind. But this is one topic that a lot of people are not getting. And some of these stocks, if I had the time, what I would do with my time is I would get FinViz or something like that, and I'd be running a scan on every biotech company that has a promising drug that is trading at or near cash level. And I think you'd be surprised on what you're going to find that happens through 24. And make a list of them. Every company that's in biotech that is trading at or near cash levels, not book value, near cash levels, that has a promising drug. I would go and take a look at that, right? Because basically you're buying a call option on the company. For example, this SPRY, if we take a look at this, this is something we bought down here when it blew up. Now, I had the confidence to get this because we have some people in the room that are very sophisticated with these types of drugs. I'm not a physician. There's a bunch of them in the room, and there's people that specialize in this kind of trading with the FDA, and they have a much different insight than I do on why things happen there. So I utilize that, but also utilize my own analysis to come up with ideas for us, and then we just extrapolate it out and come up with a process. And this was one that just made so much sense. We got in at like 308. We watched it trade up, trimmed, and we just left it on. And I don't usually like buying the little guys, but this made so much sense. So these kinds of deals are out there. No one's really talking about it, about how easy this trade was, but I pretty much crushed on this trade any outsized gain that I would have made on a percentage basis in something like a NVIDIA or an AMD and trading it around. Again, fundamental analysis and then overlaying that fundamental analysis with very simple technical analysis, it really can give you an edge. But I expect to see way more deals like this out there this year. And, this is probably a really good time to just cover this CRSP and get into this so that you can see what I did and why it was so important. So we had a bunch of people in the room that were long this, and they absolutely killed it on it. Like from back in here, pulling money out in here. And it was not one that I did. It was one that they did. And people that just really knew the company and knew the story inside and out. Now, what I was watching how this was pulling back, and then I was looking for an opportunity. And I found that opportunity in a trade, and I'll show you that trade. So you can see right here at 11.20, scalping, trimmed up $1, trimmed up $2, cut 100%. Thank you very much. And I'll show you where I cut it. And where I cut it was right here. And what I'm looking for is I'm watching that control bar. Remember, the first bar down on a 1 minute chart based upon when news hits is what? That is your deciding bar. That is the bar that you're watching all the high frequency traders and algos saying, these are my levels. This is where they said what? I will sell. This is where they said, yeah, I'm going to stop buying. And when you got back to that level, they said, yeah, I'm still going to stop buying. And so what happens? And you can just watch what happens. That control bar reject, watch that level. This trade took all of a minute or two. I literally couldn't even type it out fast enough. I actually had to go back and correct because of how fast I was typing for it to happen. And then we start talking about it, looking at the setup, and we're going, okay, that's a possible failed H. And then you watch through this again, and you watch my hopes and dreams of that being a possible fail H. What? They're smashed. My dreams are smashed to pieces. Okay, so now I'm at 63.94, right? I'm scalping CRSP. I might be early. Okay, listen to those words. Why I'm saying that might be early is because you can't really look at that and say, well, I really think that's going to hold. It looks fantastic. I can't wait to buy more of that. But down here I have RSI. People don't like RSI. I'm going to be blunt. I just don't care, but it works. So here I am. And you can see the lower low from here and here. Let me get my fancy pointer so that you can see this. And you can see the levels here and here, and then here and here, right? You see that? Okay, so what you have is that's called a divergence. All right, why is that important? Because we know, and you know from watching these videos, that RSI does what? It determines the magnitude of the move. Well, if I'm dropping down more, okay, and they're saying the magnitude of the move is slowing, does that really make sense? If I'm dropping more faster and the magnitude of the move says I'm slowing down, does that really make sense? No, I repeated it twice on purpose. So you can see where I'm going with this, right? So now you have my attention, okay? That's all you have. You have my attention. It doesn't mean that I'm right. I might be early. And then here I am watching my hopes and dreams of my scalp trade go up in ashes. Now look at where you are, 62.61 right now, okay? And then watch this comment, buying 62 puts for $1 and then buying stock against them. Total risk is $2. So what I'm doing is I'm buying stock, and at the same time I'm buying stock, I'm buying the 62 puts for $1. Why am I doing that? So if I walk that into my stock, I can do this two different ways. I can take stock at 62, right? You marry the call to it, or you marry the put to it, sorry, and you put that into your cost. All right, so now you say, oh, my stock's 63. But let's say it goes to 58. I don't care. I could actually sell the puts and stay long the stock at 58 and look for a bounce. But what that does is it gives me leeway to do a couple things. It gives me the leeway to see if I want to stay in this or not. And worst case scenario, I lose the $1. And I'm going to lose $1 and change because we know there's going to be slippage when you sell the option, right? If you close the option. And you know you're not going to get exactly 62 on the stock. So when I say $1, let's call it $1.50 of risk. But now you've quantified your risk. And if you can quantify your risk, well, you can determine your position size. So instead of going out there and normally where you're like, oh, I could lose $3-4 on this. Oh, I could lose $1 or $2, $1.50. Well, now your position size could be massive because you know exactly what your risk is, right? This works. This type of trade works great on Fridays on news events because you're basically just marrying your risk to it and buying the puts. Total risk $2, sold into 66. Still long, trimmed. So what happens? It comes down here, and this is the wicks when you're starting to buy. And then all I'm doing is scaling out into what? The neckline, okay? And you can see still long, trimmed, sold in 66, divergent positive was the trigger, out, up $4 in the trade, and now I have free puts at 62 if I want to come back again. Net 3 on the trade, I can always add back again, all right? So if you understand that, then here, let's just watch this play out for a second. I think that's really helpful. You might want to watch that again because this is such an easy trade to do once you get it. It's just, once you get this trade, it'll just save you so much ag because these kinds of trades, and there are people that probably even did better than me on it that just bought blindly, but the first trade was this. Okay. And the first trade was I'm dropping. Okay. And you don't know where it's going to stop. But what I'm looking for is I'm looking for some kind of trigger to tell me that it's okay to get in. I get to the neckline and I drop. And then When I get back down to this neckline, I'm starting to say, okay, I might have a failed H. And then we can see my hopes and dreams are smashed right here of my failed H, and it keeps dropping. Now I have that doji. Now, if you're looking at that chart, is there anything that you would look at there that would tell you to buy? No, okay? In comes secondary indicators, right? First primary indicators are not giving us anything. What do we go to? We go to secondary indicators. Well, that just makes sense. All right, then you start trading up again, pop. See the little turn? Goes up here. We're victorious. Yay. Now, what are we doing? We are selling into a neckline. We are selling into VWAP. I don't need to be a hero, right? And you can just see how it plays out. Now, do I care that I didn't get that? I could care less that I didn't get that. And I could care less that it didn't go higher because the trade worked. And that's all I care about. Did the trade work? Did I make money? You can always go back later and optimize the trade and say, how could I have done better? But it really didn't matter because I made money and then I had free puts. So let's say that this went to 58 or it went back down to 62. I have all these different options. I could be closed. If it did drop back down and roll, which is a probability, I could close the puts, pull my money back out of them. I could go long stock again and see if I could catch another bounce. There's a lot that you can do with this, but I'm not going to bore everybody with this. But you might want to watch that again. So that was really the second topic that I really want to cover. I really want people to understand that you need to be looking at XBI names. And what I'm trying to do here, guys and girls, because we have a lot of girls here that watch as well, 15%, and the average is 5, so that's kind of cool. But where am I going with this? You need to look at XBI. That's how I started this whole conversation. You need to start understanding why is companies like CERE being bought? Why is IMGN being bought? Okay, you're coming into December. Because people are getting itchy. Why are they getting itchy? Because they know what's going to happen in January. You're going to see all these deals start to happen. You're going to see all these biotech deals start to happen. This group, I can't remember the last time I saw this group this beaten up. I really can't remember the last time where nobody wants to be in them. There's literally no hope for the group. I mean, it's been brutal when you really look at it. You're down to these trough levels if you just take a look at it. And I like looking at the XBI just because it's a little more diversified. But I think the average name is 1.5% in there. But you look at that level, and I mean, you're right back to key support levels. It does make sense that at those levels, when you're looking at the weekly, the RSI, that you might get some information here that might lead you to think that there's some deals out there. But remember, and we went over this maybe a month ago, private equity has more money on the sidelines than any time in U.S. history. And that leads to more deals getting done, them lending money on those deals, which obviously is important, but it also leads to innovation. And that's going to be our segue into our next topic, which I think is really pertinent. And what I'm going to show you is a slide presentation that you really need to pay attention to. A lot of people in the room, I put the whole presentation in the community. So if you're in the community, you can just click the link. I put it in the forum and you can watch it. But this is really important because people look at AI and there's a bunch of people out there that are just, there's no other term to use besides ignorant, and ignorant in the fact that they just don't know anything. They just don't understand it, right? Because they're not educated on the topic. If I was somebody that was trying to figure out how I'm going to make money over the next 5 years, I would be spending an inordinate amount of time understanding AI, that cycle, and how it's going to affect the world. And I mean that. How is it going to affect the world? I think that it's going to be bigger than the internet. Okay, that's my opinion, and I have a basis for that. Now, that doesn't mean that NVIDIA is going to be the winner. It doesn't mean that Microsoft's going to be the winner. Okay, it doesn't. But I do think that they have the potential because we didn't know who was going to be the winners during cloud. We think it's Microsoft that was the winner. We think it was, because they went up, but we don't understand how much Adobe actually benefited, right? So when you start understanding all these nuances on how Adobe actually from 2010 was actually one of the biggest winners, you don't realize that, you don't understand that. Right? There's parts and nuances that we don't understand. So we're going to get into some of this and how you can start to look at what's going on in AI. But I think this is a really important distinction for people to get. Now, when I say distinction, really what I want you guys to understand is this is my opinion. And I'm in my late 40s now. And I was fortunate enough to watch these cycles. And so people say, oh, it's not like that. And I'm going to agree, it's not like that. It's actually going to be faster. So the one thing about this, let's just talk about what we're looking at. These gentlemen came out with a slide presentation. It's about 130 pages dictating what's going on with AI. I took the ones out that I thought were the most pertinent. Again, in the rooms, I dropped them for the community. But I think it's really important to get this. and understand this concept, because there's a lot of noise out there going, oh, this is a fad. This is far from a fad. Anything that makes companies money, they're going to do. Remember, companies are the only thing they care about is making money, right? It's just a fact. And so anything that's going to innovate and give them an edge is going to. You remember 2 weeks ago, we talked about you're in an environment where they are going to cut rates and we're going to increase productivity. You remember that statement, right? It was about 2 weeks ago, for those that watch these videos pretty religiously, that we said that, they're going to cut rates, and we walked through how we got there. CMEgroup.com, and then you just go to Fed Tools and you'll see it's a free site, very clear. And that productivity is going to increase. Well, when was the last time that happened to this extent? It was 95. We had the Fed cutting rates, Greenspan, and we had the internets, right? And I said internets on purpose. So where I'm going with this is you're entering this, and I think that this is going to be even steeper. 2 weeks ago or 3 weeks ago, I threw out something about watch this guy on JP Morgan. You really want to watch that clip out again. I think it was November 22nd. And I think it's the 52-minute talk on Bloomberg surveillance. I think that's it. And then see if you can find it. If you can't, comment below and I'll repost it. But he walks through why AI and why I've been saying Cisco, NVIDIA is our Cisco. And he explains why it could even be greater. And I understand where he's going with this. It's really hard to argue with these kinds of guys when they have access to information that we can only really, surmise or guess what they have access to. So if you look here, and let's just get to it, you'll see the slope goes up and then it starts leveling off. But we're still using the internet, aren't we? Okay, from 95 on, we're still using it. We didn't stop using the internet. Did you stop using smartphones? Did Apple stop making the smartphone? Okay, now they're getting all excited because they drop it by a gram and they make us buy a new jack, right? I mean, it's not really innovation anymore, is it? Right? It's just more of an annoyance. So if we take a look at the internet and we take a look at smartphones, and we can see how we started here, and then look how fast we got to here, look how fast we got to here. And that's what they're showing us, U.S. technology adoption and how fast we got there. I don't know who's not on the internet, but whatever. So here you are, smartphones, and now you can see where AI is. Okay, so you can see what these gentlemen are saying about this. And they have a little blip right here on some kind of disclaimer. AI is poised to improve productivity significantly. Do you think that people that own companies want their productivity to increase? And I would say yes, they do. Okay, well, how has this happened since the 50s? We had analog, right? All the little beep boops. And that was 1950s, and it took months. Design on paper, physical copies, single player, manual, you get it. Weeks, PCs, right? Easy to design, local software, easy to iterate, digital, single player, manual, okay? Internet and the cloud, design on webs, digital, collab, manual. Generative AI created design with human prompts with text. Wow, what a time to be alive. Minutes, digital, collaborative, automated, okay? Do you see what's happening here and how they're shrinking these times down and down and down? Okay, this could lead to some of the most growth in productivity that we've ever seen. In early January, I was talking to people about this and saying that I think it was like 10% growth more over the next 10 years in GDP because of this. Like it's absolutely insane what productivity could do. And Druckenmiller gave a speech on this in his Bloomberg interview, and I've tagged that a couple times on how these people that do development are 7 to 8 times faster for those that know how to use these products. That's only going to get more and more. So please understand that it's not going to go away. People are not going to say, you know what, I'm not going to use this and make less money. AI has the potential to drive the economy for years to come. And this is what I was talking about, right? And they do a much better job. They're much more eloquent than I am with just my little arrows going, productivity goes up, right? Because we want more productivity out of each worker to rates go down, but you get it. 35% improvement in productivity was driven by the PC and the internet. 35% improvement in productivity was driven by PC and the internet. And then you can see that right here and how that's playing out. And then they talk about today and what is the future with AI. And they just show you from 86 to 08. And then obviously you're going to have that blip because what happened here that would affected productivity with the little global financial crisis. Everyone put everything under the mattress, but you get it. All right, why cloud infrastructure became a huge market. While cloud infrastructure became a huge market. Get it? While we're looking at AWS and we're looking at cloud, Azure, right? While we're looking at all this, the hyperscalers generate 150 billion. Entirely new computing. Most were already public company with resources to build out data centers. Where did the value accrue in the cloud stack? And here's the cloud stack. and it shows you the breakdown in cloud stack, and then it shows you the example of companies, percentage in total in stack, Salesforce, Adobe, 260 billion, Confluent, Snowflake, 140, 22%, Amazon Web Services, Azure. Okay, why I like this and what I think so fascinating about this is if someone was going to tell you that when this was all going on, that Salesforce and Adobe were going to be up here in 40% of stacks, not everybody would understand that, not everyone would believe that. Why I think this is important is we are looking at NVIDIA, we are looking at the Ciscos of the world, the NVIDIAs of the world, right? And I do think it's a fair comparison, and I do think we need to look at that comparison. There's companies out there that we don't even know that are going to benefit from this. And we're not even in that stage of it yet, where the new companies start coming out. And I think that's where this just gets really kind of cool. Now, AI is the latest wave to inflect in the semiconductor industry. All right, and so then it just shows you mainframe PC, smartphone, cloud AI, and shows you the size of the incremental semi-speed, 50, 250, 500. So again, I think this is a really important distinction where they're looking at this and saying, okay, you doubled from mainframe to PC. From PC to internet, you went to 150. That's not really a double. 150 to 250 is not a double. They're thinking that this is a double. Okay, what other sector was a double? Mainframe to internet. You're seeing more and more comparisons to this than we've seen in the past, where you're seeing this triple or quadruple, and you're seeing people talk about how this could triple or quadruple here. Now, no one knows yet. Let's be real clear about that. Just because this guy put stuff on a slide does not mean that it's right. But the thesis behind this and how these have played out over time, that's what makes sense. So then you drill into this and go, okay, well, who benefits? You might want to remember this. Lam, Applied, NVIDIA. Why? You have to build out the equipment. If you don't have equipment, what are you going to do? All right? NVIDIA, ASML, you're going to need lithography. Micron, you need DRAM. Samsung, someone's got to build them, right? So you get this. I would put ARM in here, and they have ARM here. I think ARM is pretty undervalued in regards to AI personally, but that's just me. As far as I'm not getting into the valuation, I'm talking about that I don't think people get it yet. Could AI workloads drive a cloud reacceleration? Well, that's interesting because cloud growth rates have been decelerating all year. And they're talking about, could AI be the catalyst for growth in cloud? Kind of an interesting idea, right? I mean, NVIDIA did do $32 billion in the last 12 months, but hey, it's a fad. AI is supposed to have impacts across the economy, in power, in data centers, the cloud, and semiconductors. Again, they're just reiterating the $32 billion. They're like fanboys of NVIDIA. AI compute has been primarily served by GPUs. So for people that don't understand GPU, CPU, I just want to take a second, say thank you for your comments on the fact that I don't have to edit these and spend time in it. I'm able to pack way more data in here, way more information. So I really do appreciate that. Also, please share this video. There is a lot in here, and there's a lot that could really help people at least understand these concepts. Whether they agree or disagree with me, I could really care less. But this is a really important concept. AI compute has primarily served by GPUs. Okay, GPUs are able to serve AI workloads much faster than CPUs. All right, great. Why is this important? So that you understand the difference between a CPU and a GPU. And what do these chips actually do? Okay, GPUs are 70 times faster. Time to produce an image with stable diffusion, whatever that is. Lower is better. 530 seconds. Wow, we're gonna need more coffee. 6 seconds, okay? A100, RTX 3090, A6000. Okay, I wonder who makes these chips, right? Something to think about, okay? So when you're looking at this and you're looking at this data, do you think it's important to have GPUs? Do you think that you want to be here, all right? Or do you want to be here, right? When you start thinking about it, you can see where we're going with this and how this innovation can continue. The demand for GPU has only begun. They estimate the ramp up for AI servers growing at 25% year over year through 26. This is what I've been saying. You're almost a year out through all of 25 on NVIDIA's chip, through 25 on all of NVIDIA's chip. I mean, it's staggering how that's going. So 38%, 27, 26, 25. Of course, there'll be bumps and there'll be years will be off and not off, but this is not going to go away. Now, where am I going with all this and these three concepts that we went over? I want to just be clear. You can day trade Tesla. We can pull money out all day long. People in the community actually even created a room that what they do is just day trade Tesla all day long, which I kind of find funny. They're actually doing pretty well doing it. And I applaud them for doing it. But I want people to get these concepts, because these concepts, yeah, you can pull money out. Yeah, you can make money there. But if you understand the underlying concepts, you can do really well. I see it holding the 55. I see how this stuff's holding in. I'm certainly not saying to not do this. I mean, there's some absolute monster trades out there. If somebody told me that my best trade on the week was going to be coin, I would have told them that they were crazy. But nonetheless, it's hitting 118 and now you're at 146 and everybody thinks it's breaking and then it doesn't. This is the kind of stuff that you want to start watching and you can see in the market. That said, you always have to look at where you're at. You start seeing an 87, 90 on RSI. You're in the stage of hot potato. We all know that, hopefully at this point. But that doesn't mean that you're not going to see major moves in names. One of the names that we started playing with the other day and we're doing okay with is this hood. And you're going to start seeing this, but you're going to start seeing it all these little guys, like even Sophie. It doesn't matter. Why? Because you still have that interest rate trade out there. So this game has changed, right? And understand that, like the reason on why names like Sophie are going to move. I would start to watch these. The other area that I think is just absolutely fascinating right now is what's going on out there in specialty retailers. You look at names like ANF, AEO, these kinds of names, they all look like they were left for dead. And all of a sudden, they're just all exploding. So I'm not really sure why the resurgence in these. For a market that was supposed to be heading into a recession because of how they raised rates, I find that really very, very interesting. And I do get asked a lot to cover names that we went through before and what's going on there. You'll notice that YPF, if you read the headlines, they recently just raised prices for the first time now that they're actually able to do that. And this is that part of that whole Argentinian trade. And we should probably talk about this trade just really quickly. And the premise of it, this is not something that you're going to go out there and say, oh, he's going to turn the company or turn the country around in a very short period of time. This is going to take a long, long time to play out, a long time for this trade to play out. And so just understand that. And if you have patience with it, I think that this will be something that goes through 24 that does quite well. That's it.